Did you know that Chammath's goal is to build a Berkshire Hathaway for the social media generation? Yes, it's true. Have a look at this.
I want to have a Berkshire-like instrument that is all things, not to sound egotistical, but all things Chamath.
The way Chammath manages his portfolio is something that encourages a lot of investors to act in a certain manner. One of the greatest inspirations he has been bringing out is to ensure that your portfolio is as diverse as possible. This means that one must have as many investment asset types in their list as possible. This is something that we may have heard a lot of times from a lot of other great investors. Say for example, Peter Lynch. Chammath has some ambitions based on different parts of the world. Of all the ambitions he has, we are well aware of his political ambitions in California. Let's look at what he actually wants with his anti-establishment appeal, and you'll see what is the difference that he seeks to bring forward with the world of investments.
I think it's sort of defined in the mission of social capital, which is that I believe in an even starting line. I think that's probably the simplest encapsulation of my belief in how the world should work, which is that we should all effectively get access to the same resources, and that as many of us as possible should be allowed to get to the starting line, and then the gun should fire, and then the outcomes will be what the outcomes will be. And I think a lot of us feel that that isn't necessarily always the case, that there's kind of entrenched hierarchies that prevent progress. So I push against those because they touch a very deep emotional part of my value system. And I just don't think that the world is a better place for them. And I think we're better off without them.
So one of the things you can take home from all he mentioned through this interview was his intention to promote certain kinds of businesses and to find a solution to all the problems the current system has. Hedge funds is another stream in which Chammath is extremely interested in. He says that hedge funds are a really important part of a financial structure and hopes for the good ones to thrive in the economy. He highlights the fact that their presence in the society is vital. However, he also says that disclose needs to improve and that every other part of the society, owing to more complicated internet and softwares, things have started to move towards real-time disclosure. Now, what does he mean by real-time disclosure? Stay tuned and you will see. Hedge funds and banks are no different according to Chammath. He says that they are a critical part of the financial infrastructure and hence must be treated in the said manner. On the other hand, he says that a value investor need not mean cheap. Chammath accepts that he himself is a value investor. According to him, it means something that actually has a value. When it comes to handling these deals and making an investment, Chammath says that he loves to make an investment after looking at certain factors. He will look into the cash flows of this business, how it creates a moat, by which he means a harder competition for others to come up with, and more importantly, a price where he can get it for a margin of safety. So these are a few factors that Chammath thinks are important for him to consider before thinking about investing in one. He says that the margin is very important as it allows the company to stay afloat even if they mis-execute in a quarter of a year and have a small hiccup. Things will be as smooth as they were before the error. This stability gives him a better confidence and helps him make a better decision about a company.
Understand the right unit economics and contribution margin profile that allows us to get to profitability sooner. And I think over the next few years, you will see many companies actually get to profitability.
He says that this will be fine because the investor will, in that case, have an entry point where 5 or 10 years from then, the business may be 5 to 10 times bigger. To give an example about the margin of safety, Chammath speaks about Tesla and accepts that he invested in Tesla back in 2014 or 15. He says that compared to the factual circumstances back then, Tesla has been an enormous winner. He also accepts that he believes in what Elon is doing, and also calls him one of the most important entrepreneurs in our lifetime.
The kind of technical sophistication that he has in his mind, that he's been able to apply across his companies, is second to none, quite honestly. So when we looked at Tesla, what we thought was a company at an inflection point that was as close to its version of an iPhone moment. And what I mean by that is a company that had been growing up, taking risks, and had finally found the mass market product that would unlock an enormous amount of product market fit. And that was the Model 3. And so far, what I would say is he's living up to what he has signed up for, which is to commercialize electrification.
However, one thing that we do need to notice is that it took over 15 years for people to understand that they are a legitimate car company. However, the way Chammath saw it, Elon was way more than a car company. He thinks that it may take another 5 to 10 years for people to realize what the next arc of innovation was. This then led the conversation to the concept of SPACs, something Chammath has been working on for a long time. He says that what is happening in SPACs is really about the dismantling of the traditional capital market with respect to fundraising. What does this mean though? He says that in 2021 and going forward, we will still be picking brands, however, the choice has become more atomized. Now, we need to know which index funds are the ones that have the potential to make you rich. It was found through a study in 2020 that nearly 90% of actively managed investment funds fail to beat the market. This is one of the reasons why the portfolio managers of the Ivy League educated investors who spend their entire workday in an attempt to beat the stock market and gain the profits they desire have to do so under high pressure. Always keep in mind that one needs to invest in the long term. You need to look into the companies that strike your interest and have an analysis to determine the kind of progress you expect from them. Taking risks is an important element of investing. However, when you take a risk, make sure you are aware of the result that could come and the amount being invested. This amount must always be the ones that you are ready to lose. If you were to think of the risks you could take in today's date, these will be the investments you make in the .com bubble or the metaverse. Even if you do get into these lines, make sure you continue investing in the index funds. So irrespective of what happens on the other side, the index funds will always have your money invested in some way or the other. In index funds, you will never see the prices skyrocketing over a huge margin. This is a very good thing as it also prevents the opposite of it taking place. So this also makes it clear that when it comes to assets like index funds, this turns into long-term wealth and not short-term. So while you get these kind of returns in stocks or crypto, you can certainly expect the same falling down really hard and you make losses. On the other hand, what happens in index funds is pretty simple. You'll be able to invest in a lot of companies altogether. So even if one company falls, you still have the others to keep your margins safer. S&P 500 is a very good index fund and is also one of the most renowned ones in the market. You must have heard of this term. The S&P 500 consists of 505 stocks in it, and it includes different percentages of various shares. A company may become a part of this, but it will have to follow strict guidelines to make sure they do form a part of it. Another option you have in your hand is to invest in an ETF. This is also a very good thing to invest in. These can be bought and sold just like stocks and do offer fractional investing.
We are going to start a process to try to educate the regulators so that they can expand how they think about what an accredited investor should be. The reason why we cannot give access to the pipes and some of these other mechanisms to retail is because of very strict regulatory definitions that we live by about who is a quib, who is an accredited investor, and those things are changing, but they're changing slowly. My perspective is that right now, the way we define it is too broken. So I think that there's work that I can do, and hopefully people will listen to those arguments and expand the rules, and that way more people will be allowed to buy pipes and these other things.
So Chammath has a lot to do according to him right now. We'll keep you updated with all the new latest updates he comes up with. Hit the like button and subscribe to the channel and stay on track with us. We'll meet you again in the next video.